We'll go ahead and get started. We've got a special guest today, Dan, and I'm just going to say Dan K, like Coach K. And Dan is a very active investor in the commercial space, not only in multifamily, but also in self-storage and industrial and potentially other things that I don't know about yet. And Dan's going to share some information with us today that if you're looking to figure out how to be a better investor, how to pay a little bit less to Uncle Sam and a little bit more toward investments that can create passive income. He's going to share some secrets with us today that I know we had a lot of people reach out to us on the social medias today saying that they would like to learn how to pay less in taxes. So I hope some of those people are either listening on the live streams or have a chance to go to Vinky's YouTube channel and check those out afterwards. And I am Vinky Loomba today. That usually you can tell my name tag is right there in the bottom. And but Vinky has asked me to step in and help her out today. She had a family emergency, so we're absolutely happy to step in and have the opportunity. So Dan, if you will, I'll just turn everything over to you. And if you could give us a little bit more on your background.
That'd be great. Hey, y'all, Dan Kryzanowski here in beautiful Austin, Texas. And this is a real t-shirt and it's really warm and sunny outside. So growing up in Scranton, Pennsylvania, this is why we live in Texas. And I guess why everybody else in the country is moving here. With that, I know it's Friday afternoon, so cheers to everybody. And I know we have some folks, Josh, Federico, relatively new, and many of us all here in the space. Hopefully there's some bits and nuggets for everybody. And I'll try to share the most important first. And please, if we could keep it interactive. So I'm going to share my screen. All right. Can everybody see my screen okay?
Yes, sir.
All right. Good stuff. All right. So the $64,000 question, and in my humble opinion, and I do feel I have the numbers to back it, the $1 million answer. So it's Friday, grab your drinks, let's go on for a ride, have some fun here. So quick bit about me. I love how we talk self-storage, so I always lead with spare foot and everything else, but it's been quite a journey for me, both as initially an LP investor, which Jim, I thought was great advice, Federico. I learned from others' mistakes. It's nice when it's, you can learn stuff without losing, other people's money. I'll put it that way. And that helped me become a capital raiser over time. And I dipped my toes, not just where I was most comfortable in storage, but in multifamily, where I have a boatload of investments, infrastructure, and even a little bit in resident here. I am licensed under BV Capital, so do want to disclose that. So with that, here's what we'll talk about this afternoon. And as I said, I feel the most important things we're going to hit on in this consecutive order, and each one will take the least amount of time. So best bang for your buck if you have to drop early, but I do think we're gonna have a great discussion just with my fellow attendees on here and the networking. So I hope everybody can stay. So with that, here's some of the items and let's just get right to it. If anything, and I know a lot of folks here, Jim, Masha, I know you're aware of this, but you can use your retirement dollars to invest in real estate and other alts. I know we're all real estate folks here, but also particularly as Bitcoin and a few other things come into play, maybe a fellow entrepreneur, I realize you can also use your retirement here. It's not strictly real estate. I know some of us came into this world maybe with a real estate self-directed IRA. Frankly, that was just a marketing ploy. An SD IRA could and legally does cover multiple asset classes, and one or two that they don't, which we'll talk about later. Flip side here, it's kind of like the eye test, but For many of us that are raising money on here, I know Angel, you shared you have a great deal. Be aware that your investors can use their retirement dollars on your next deal, or once again, your company. So for folks, it's not just real estate here. It could be anything passive that you're doing that you're accepting capital into. So it works both ways here. And the nice thing is the rules are the same for the investor in accepting money. It really is not that confusing. And then the final one here on the eye test, which I think is most exciting, is that self-employed individuals, and I would guess, even with the folks that said they still have a W-2, that you also have some bit of self-employed income. And we'll take a good moment to talk about that later on. But you can actually lower your basis by, I know I said 64,000, but it's a little bit over 64,000 in 2021. And this is actually moving in the right direction here. So if your CPAs are not aware of this, please hit record right here, or at least make them aware that this world exists. All right, so with this, welcome to the Friday afternoon $64,000 Revlon quiz game. You will see some photos from the 1950s, so hopefully nothing too sexist or anything else like that, but it is the 1950s US, so you got to go with me here a little bit. So with that, I will hop in the booth right now. Hopefully my stuff doesn't stink. If something is questionable or you feel it's misleading or maybe off, please let me know. We're all learning here together, but I do feel pretty good with the information that we are presenting this afternoon. So with that said, what is the $64,000 question? In my opinion, it's what is the maximum contribution to my self-directed solo 401k in the year 2021? So the answer, once again, it's not just 64,000, it's 64,500, but 64,000 sounds a little bit better here. And we'll go into a little bit the different parts of the contribution, but I do want to take a quick moment here, kind of the order of the verbiage, self-directed solo 401k. Let's work backwards a little bit for some folks new on the call. You know, 401k, you probably think that's your W-2 job's 401k. Okay, it's a qualified retirement plan, I'll give you that. Solo 401k, similar to a SET, you're self-employed. You see the S and the S go together there. That said, there are even solo 401ks, but they're with the likes of a Fidelity or one of the large brokerage houses. You're still really limited to what you can invest in. You don't get the world of what I would consider when you get to capital S, capital D, self-directed solo 401k, where literally the world is your oyster for what you can invest in. So just be clear that, and particularly folks that are new to the syndication capital raising side, from a quick conversation, somebody say, oh yeah, I have a solo, okay, but is it self-directed or not? And they might say, sure, it's self-directed. You know, I can choose what I want. Well, that's not fully self-directed. As I said, you know, capital S, capital D, self-directed solo 401k. All right, so here's the good stuff. I took some liberties, assume the gentleman in the corner is over 50. Sorry if he's younger and you're related to him, but that was just my little guess here. But here's the good stuff, and this is what gets us, you know, to the 64,000 plus. And I just want to, I'll drop down real quick to the bullets. So I call it the E, meaning the EE, and the the ER. So what we have here is 26,000. So for somebody over 50, I don't think any of us on the call are here, but I would bet a lot of your investors, a lot of our investors, our parents, for example, a great example, our mentors, our folks when we were in our 20s and 30s working corporate, a lot of these folks are over 50. And there's going to be one or two points that are not on the screen, but I say if you are taking notes at home, there's some really good ones, and I'll share one in a moment here. But what I want to show is on the employee side, you see in the sub-bullet, it talks about the 19,500. That number should ring a bell, especially for us W-2 folks on the call, because that's the maximum of your W-2 job that you can defer. So once again, because we're still in a solo 401k, you still get the benefit of the 19.5, but in addition for your age, you're getting that additional 6,500. Now, so right now you can argue we're kind of on par with W-2 employees. what is amazing, and frankly, the huge difference here in the solo 401k is the profit sharing or the employer contribution. Now, once again, not the employer you're working for, yourself, your own company is frankly paying you as an individual a portion of the profit share. It's not dollar for dollar. A good rule of thumb, I would say, is 20% on your net earnings. Once again, not top line revenue, but net earnings. So, you know, from a quick example here, let's just say you're over 50, you make 100,000. You can do the 26K, and then in addition, 20% of the 100,000 would be an additional 20K. So in this brief example, you'd be able to contribute 46,000 this year. And the one point that I really wish I did have put on the slide here, but I'll refer to it a few times because I think it's, you know, super, super important, is that although we say solo 401k and individuals, realize that your spouse can also be included. So as long as you do not have W-2 employees. So I know that was a bunch. Jim, I saw something come in on the chat. I don't know if anybody's taking drink orders, or was it a relevant question to these slides?
No, that was Julie. She apologized. She had to jump real quick.
Okay.
But if anyone does, please feel free to unmute yourself and ask a question. So was everyone aware that that you had this option and at a much higher number if you were self-employed? So we'll take a poll here in the chat. 1, if you were aware, 2, if you were not aware. And also, is there anyone here that believes they cannot have a solo 401k or own their own company, or they feel it costs a lot of money to set up their own company so that they could have a solo 401k? And if that is the case, you unmute yourself and let Dan explain how that can work. But we're not going to give you a lot of time. So we'll keep moving.
Yeah, I love all the number ones here. And I do sincerely say thank you. I know it's Friday afternoon. Thank you for being here. And I do feel collectively with the folks that I do know, I consider many of you best of breed. And I think collectively taking the time for this is how, as we say, we sharpen the sword. So thank you once again. If you're not 50, it's pretty simple. You know, you don't see that 6,500, but it's the 19.5, you know, the E, and then the 38.5, the R, which totals to 58,000. Now, the beautiful thing here is what a lot of folks don't know is that, let's say you consult on the side, or you're a realtor, for example, which is a great, by the way, there's 1.3 million self-employed realtors in the country. That's a huge number. And a lot of us do have side gigs. We sit on boards of directors. There's many ways, and we'll talk about some more later, that you can qualify to be in a solo K. But let's just say whether you make 50K or 500,000 in your self-employed entity, not only for you, but if you are married, your spouse, right off the bat, you have 19,500 times 2. And remember, going back a previous slide, it could be $26,000 times 2. That you can defer right off the bat. So, the real savvy folks, no surprise, some real high net worth folks that sit on boards of directors, sometimes you can even bring your spouse on as your admin, for this purpose. So right off the bat, for our younger folks here, you're looking at 39,000, the 19.5 times 2, and then in addition to 20% of net earnings. So, once again, just a great way to add some money really, really quickly. To get your balance probably over 100,000, frankly, within 2 to 3 years, which in the normal kind of W-2 job, or if you're just using IRAs, you're not going to get there for a while. All right, so here's some numbers. You can go, as I said, the rule of thumb is the all-in, meaning the total number goes up about 1K annually. And you can see that, starting back in 2018, 55 and 61, we talked about the 58K and 64.5 in 2021. That said, there is what I feel is a very significant increase of $3,000. Once again, it's not just the 1,000 or so that's coming next year. So, you know, what's exciting too, let's let Chris in here, is, as I like to call it, the future looks bright. SEIS, so we're going to have some acronyms here, folks. Self-employed individuals, and the solo K, as I mentioned a few times, just a short form for the solo 401k, not a legal term, just my term here. But what I point out, and here's my high graphic, see the smiley faces, the employee, so for our W-2 friends, congratulations, you get an extra buck next year from 19.5 to 25. But as you can see, it's the $3,000 difference. 2,000 of it is the employer contribution. So as most of us, and I know some of us are at a crossroads from W-2 to self-employed, realize you are getting a really good benefit, and you have incentive. Obviously, we all want to make money, but you have incentive to kind of make more money, to take that 20 or 25% of employer contributions and, you know, become a rock star and max out at 61,000 next year. So I'm really excited, particularly that the split was 2/3 on the employer versus the employee side. So with that, I'll take a super quick pause as we shift gears a little bit. Any questions up to this point?
So I'll ask a question, Dan, for the greater audience. Can you have multiple 401ks? If I have one at work, does this even apply to me?
Yeah, and Jim, I'll give you credit for looking forward in the deck a little bit, but the answer is yes. And it actually is pretty common in 2 instances. Let me just step back here. You know, especially for younger folks, I'm here in Austin, part of a startup community. A lot of jobs either do not have a 401k, as W-2s know it, or you have a provisionary period, or maybe they get their plan midway through the year. For, let's say, for one reason or another, your day job, you do $10,000, okay? In addition, on the side, you do consulting, let's say. The first 9,500, once again, 19.5 minus 10,000, in this example, you can then get up to that 19,500 with an additional 9,500. So yes, you could have a W-2. Now that said, you cannot double dip. You cannot do 19.5 in both your W-2 and here. The government is a little more wise. Now that said, give you a final example. Let's say, you know, you max out at work, your day job, your W-2 at 19.5, and you make 100K on the side. In that employer, you know, the ER, you can still do 20%, or maybe 25%, depending on what you're actually doing, of your net earnings from a profit sharing. So once again, still be a rock star on the side. Even if you max out in the day job, you can still get up to this 38.5. And as we talked about here, you know, a little bit more if you're over 50.
And Dan, is there any strategies that I might use as a W-2 employee? As an example, let's say my employer has a match up to a certain amount, and I'm taking advantage of that, but why would I want to have a separate 401k from my employer's 401k?
Yeah, great question. The big thing is actually 2 things, is what you can do with it. And we'll talk about, I call it all the sizzle. I mean, something as simple as, hey, real estate, with all the great sponsors that were on the call earlier, here's what you can invest in. You cannot do that with your day jobs. You know, I'll say we all work for Dell here in Austin, Dell Computers. With your Dell 401k, you cannot invest in a private sponsor. That's one thing. The other thing too is that money's kind of on hold till you leave the company. And also you have to be cautious. Let's say you worked at a big company for 20 years and then you go to another company. If you choose to roll that, call it your 20-year 401k into your next company's W-2 jobs 401k, it's going to be like as you've been at company B this whole time. Some people make that mistake, and why I call it a mistake is you then don't have access to this 20 years of, say you worked at Dell your first 20 years, this great 401k, that if you qualify, and we'll get into the weeds on qualification, and you open a solo 401k, let's say you have $1 million in your Dell 401k and you left Dell, you can move as much or as little as that million into a self-directed solo 401k. So once again, big difference here between just kind of your day jobs 401k.
So from what I'm hearing you say is that you have a lot more investment options in the solo 401k. Is that correct?
You do, yeah. I don't want to say it's limitless, but effectively, with one or two exceptions, yes, you can invest in what you want, when you want, anywhere in the world.
So would it be a good idea if I have a company match to not put any more into my company 401k than the company match and then put the rest into my own solo 401k?
So the big thing here is that you need outside income that qualifies as qualified income. So if you strictly work a W-2 job, that's it. That's your only choice. And I would say, you know what? You probably should max out your day job W-2 because eventually you're going to leave that company and you can roll it into a self-directed account. Now, let's say, and many folks, they consult on the side. Yeah, I would say pause your day job a little bit, maybe get to where that matches. And then, as I said, let's say that got you to the $10,000 and you consult on the side and you make $1,000 a month. Well, that first 9,500, you can pop into your solo K. Effectively, you're going to bring your tax basis on your consultant arm probably down to 0. So, yeah, I do think, if you have established income on the side, I think it's good to have these 2 buckets set up. And then the final point is, say, once you leave employer A, you can take as much or as little of that, and you already have an existing solo 401k set up that you can transfer in without any penalties or fees.
And also, does active and passive income count for my solo 401k, or does it have to be active only? In other words, my syndications that I'm in and the profits that I'm making from various real estate, would that count?
Generally, actually, no. You're passive. So the very non-technical term I like to say is doing stuff. Are you doing stuff? And what the government does not consider stuff is collecting a rent check or day trading or passively investing. That's not considered income. What they do, obviously, we talked about being a realtor or a consultant. If you do gig economy, the true rule of law is that you have the intention for qualified self-employed income would merit you to open a solo 401k. So here, this is, as I said, but in good faith, I think you do want to be showing a little bit of that income, but it's not just from being a passive investor. Now, for folks that also manage, if it's not your property, you have a small management company and you get your hands dirty with other properties, yeah, I mean, once again, you're getting your hands dirty, you're doing stuff, that would be qualified income.
So what if you are self-managing your properties?
Yeah,
and you have a physical property management company established with an EIN and all that.
Yeah, so the situation you're here is your company on the side. If you have W-2 employees, that is not allowed. You have to put that to the side. So then the question is, well, are you kind of just doing stuff in kind for your own property? Or for legitimate business reasons on the side, you maybe manage 3 properties and your management company does 100, but you've been doing these 3 on the side since college. These 3 on the side, would qualify. Awesome. And I'll share a little bit more detail. So great questions and thanks for the color. All right. So, shifting here, which we talked about the $64,000 question and the $1 million answer. Bear with me 2 more slides. We're going to get to what I feel is the $1 million answer. So, the days of 60-40, and for folks that aren't familiar, this is, stocks bonds. And when you see the 40, and I learned this when I took my Series 7 last year, whatever your age is your bonds. So for most folks, our parents' generation, that worked out pretty well. And think about it, they say, hey, if you're right out of college, it's 80-20, 80% stocks, 20% bonds. But let's talk about reality. I mean, a lot of us have an older parent at home. My mom's 75. If she had 75% of her stuff in bonds, she'd make, 0, 1% on it. Like, even if we weren't in a crazy inflationary environment, you're still not keeping up with, just basic inflation, I'd say, in normal times. So, and also you can argue when you get into the stock market, you have some relatively pretty high volatility if you're going single stock or from a timing standpoint. So to blindly go into the 60-40, is not the way of the 21st century. So, the benefits here, I won't touch on all these bullets here, but the first bullet here is, we have the right. A lot of folks don't realize this. It's our right to our money to take back as much of it as we want, particularly from our old 401k, our rollover IRA, to move this into a true self-directed account to invest in alts. And no surprise, and I've seen this at family office shows, folks say in front of open doors, hey guys, I have less than 10% of my stuff in stocks and bonds and funds, because the majority of wealth is generated primarily through real estate and tax advantage accounts. So with this, I call this the $1 million answer here, and feel free to take a screenshot. And first I'll admit, this may or may not look pretty close to my portfolio. I mean, stocks and I think some ETFs, some funds, there's always a place in it. But if you look on the left side here, I think there's a great benefit of throwing a few chips in a startup, particularly if you support a certain community or have expertise in this space. Maybe it's just one. That's just my personal opinion. I find it of value, and it's also worked out for me. I wouldn't say just invest in 100 startups or go on crowdfunding. It's cute, it's nice. You can say you're a crazy VC, but mathematically, a lot of studies have shown that doesn't really move the needle that much and doesn't really play out. So the other side in the top corner here is private loans. And if you think of just us as humans over history, a lot of it has been one-on-one or within community loans. This is what a solo 401k or a self-directed account allows you to do. And you set the terms. Now that said, always, you might want to think of a lawyer or put on your law hat a little bit in the detail, but I would just say, even if it's one-on-one with your best friend, put up some collateral. Flip side, I'm obviously more of a real estate guy, as you know, and I know a lot of us on the call are here. Why I share this little multifamily example, a buddy of mine did this year. He's in California. A lot of his investors are, I'll say, very smart people, engineers, doctors. Guess what? They get confused pretty quickly sometimes. And I say that tongue in cheek, but what he did I thought was genius. He paid a 12 pref, that's it. I know somebody mentioned a 12 earlier on the call. And so if you put in 100K, guess what? You get $1,000 a month. No matter how many degrees you have, everybody can understand this. My 5-year-old son can kind of understand that. Bottom corner, Masha, storage baby, here we are. This would be more on a development sort of deal, but I do feel, and trust me, I can talk offline for hours on why I still feel there's significant meat on the bone in the likes of storage here, and still benefits on the development side with the right operator in the right market, of course. And the final thing here in the middle, and this is what I think a lot of our deals we pay out on, but when you break it down to really see how impactful it is that you have a piece of pref or distribution, and then you have a back end. And I always like to get things to the apples to the true dollar amount. What is the dollar bump on the back end here? So this is kind of just a real basic, but yeah, wouldn't it cool if you had 100K to get 600 a month and get something on the back end? Let's bring Philip into the discussion here. So anyways, everybody's can look a little bit different, but I'd say from a pie chart, and personally, I kind of like how a majority of mine is in real estate. I do think there is a place for Bitcoins, or to be aware of blockchains, NFTs. Not sure yet, but as I said, I mean, having little slices from a risk return, and like anything, do your diligence where you know the best. But for folks that have made, I think, significant wealth over time, no surprise it's come from real estate. It comes from tax advantage sort of opportunities. Those of us selling a business this year, the 10% step up in opportunity zones is only good through the end of the year. So I'd say also it's good to have a good CPA that is forward thinking, knowing when certain tax things are going to come due. So anyways, this is how I see the world a little bit. Happy, of course, to talk offline, in further detail. So, with that, what do you think? The solo K, here we are. It is 1K and it's gold, and I do feel that. So, what are some of the attributes? We talked about, obviously, the contribution side, but what I really like here is the checkbook control portion of it. And why does it sound checkbook? For younger folks, you probably don't know what a checkbook is, but when you have the ability to invest in what you want, when you want. So with our personal, like say our piggy bank checking account, we have checkbook control. Over here, in most 401ks, including your current company plan, you really don't have that. And even in some self-directed IRAs with a custodian or a custodial SD IRA, you don't have that. This is where the solo 401k comes in. And trust me, I made 2 investments this week myself. The one with the custodial SD IRA took 2 hours of my time. The one with my own solo 401k took, I think, about 1.5 minutes. a little bit. So the delta is legit. It literally is, I feel, an hour plus. Not just you, but the sponsor on the other end or their investor relations team is taking up time. So this is where I like the checkbook control so much. Jimmy, you kind of asked before, and I know we're showing the 1950s photos. I feel this is a great one to show a De Niro and Greg Fokker. I pass on grass, because what I would say is, what we can have on the right side of the screen is a little column to say what you cannot invest in or what not has been royally blessed by the government. And cannabis is one of those. In short, you own a strip mall, maybe there's a hemp factory in there, that's okay. But when it comes to the actual plant, nobody has checked the box, and no surprise, I don't think folks in DC are going to agree on too much anytime soon. So, but as you can see, farm assets, crypto, obviously real estate. The second to last bullet here, international investments, I think are super, super powerful. And so once again, yeah, you have to have a US postal address to open a solo 401k, but you could invest, in other parts of the world. All right, so here's a bunch of little graphics here. What I really want to point out, and I think this is really good. I know a lot of us that are familiar with IRAs and Roth IRA. Just by saying that, they sound like two different accounts, because legally they are, which means if you were to set these up, they're two separate accounts head to toe. The beauty of the solo 401k with checkbook controls, you have two unique accounts. So as I say, kind of going from one goalpost to the other here, the north and south side of the screen, you can have a traditional pre-tax account. And then maybe for things that obviously, stereotyping a startup that you feel is going to go 100x, you probably want to use, a la Peter Thiel, some Roth money, some post-tax money here. And this is just a very brief example. It all goes to your own preferences. But the beauty is, once again, a la online banking. Let's say on day one, I fund my solo K with 100K. I see, hey, I'm going to get 18% on a hard money loan. I know that's on the high end, but go with me here for a second. Let me take out 20,000 and go from my traditional to my Roth. Now I'll still pay 20,000 on 20,000 in taxes for a Roth conversion this year. But then for this investment, anything else in the future, it's going to come out of a Roth account. So that's in the weeds a little bit, but realize it's a great benefit of the solo K. So, to sum up and then dive deep into one or two and then open it back up for questions. Here's tends to be the four benefits. And we talked a little bit on some of these. So, traditional or Roth we touched on. The high contribution rates was the earlier part of our session. The loaning to yourself. I'll get into that, and then I'll just go quickly into the UDFI. So once again, traditional and Roth, I think it's better with the photo than our little graphics that we had before. But once again, the beauty in a solo K is you have your pre-tax and your post-tax. So I love this photo because it looks like we have the buttoned up, army man here. Think of this as your down the fairway multifamily real estate, and then you got the savvy startup guy here, and it could work well, it could not, but if it does, isn't it great to pay taxes on the little seed, not the big tree here? So once again, for me, and also I would say if anybody thinks taxes may go higher in the future, realize you can do the Roth conversion within your plan, do a 1099-R at the end of the year. I've been doing that many years. I'd say many solid CPAs will even have a strategy over the next 5 or 10 years of how you can do these sort of Roth conversions. How to qualify. I know these were some of the questions early on before. I said the very non-technical term is doing stuff. Our realtor friends, if you're 1099, if you're a sole proprietor, if you're an S Corp and you pay yourself, etc. The big thing here I'd say is in the second portion here, active self-employed income, no rental, no investment income. So just be aware of those. So if I don't qualify, we talked about something, you have the benefit of, maybe putting your spouse on the books or on the side, doing something like consulting, being on a board, etc. And then finally here, and Jim, this is one of your great questions before. Yeah, you could be at a corporate job and also have a solo 401k. And, many folks do. And the final thing I'll point out is that you can open a solo 401k. Let's say I do a little consulting on the side. You can contribute 0, but then roll over as much or as little from your past plans as possible. And that's something I really see a lot, especially initially folks are going to roll over versus say contributing on day one. So the loan, my 5-year-old son loved the piggy bank, so we had to keep it in here. But what's great here, let's go right to the bottom. You can take out up to $50K or half of your account balance. So what are two real examples? I think a great one here is just an entrepreneur with an idea says, even before I go to friends and family, let me take out 30,000. If this works out great, I'll pay my company will pay myself back over time. That's great. And then I, in turn, will pay my account. And just to preface, these loans, you're borrowing from yourself. The money can go anywhere, so as long as you pay it back with, say, a decent interest rate or reasonable, which is probably between, call it 4 and 8% today. And it's going to yourself. So in some ways, it's a way to even boost up your balance a little bit here. And a second example, as I said, once again, the fact that you can do whatever this money, let's say this 50,000 you need for a down payment, you can borrow that right now. Once again, there's no restrictions of the money that you borrow. It becomes, that's why the piggy bank is here, piggy bank checking account, so as long as you pay yourself back over 5 years. Really, really, really love this feature. Flip side, what's prohibited, and not just in solo K, but in self-directed IRAs, no life insurance, no collectibles. And the big thing here is self-dealing, meaning you cannot invest in your own company. You cannot buy a flat at the beach and have your parents stay there. You can't buy a condo on campus and have your children there. Unique linear family, oddly enough, brother and sister are not counted in the linear family, but you have to be careful not to give them a sweetheart deal, say vis-a-vis your other investors. So just be aware of that. So self-dealing, I say, is the main one here. And then finally, and I won't go into detail, and I'll just preface, say, as an investor, the fact that UBIT or UDFI may come up has never influenced my decision to get into a good deal or not. But for folks that like to get in the weeds on this, the solo K has a UDFI exception. And finally, there's a fair number of providers, and I like to joke, on the right is not something I made my, intern do or when I got bored during COVID. But, once again, the likes of a Rocket Dollar has a flat pricing model, regardless of asset size or number of transactions. The stuff on the right are actually true providers out there. So, once again, as we move to the 21st century, it's flat fee, whether you're going to move $1 million for one deal or, 25K and you're going to do $5,000 deals, for example. The likes of a Rocket Dollar do $15 a month. And in the spirit of the holidays, as I say, if you can spell it, you can get it. D. Kryzanowski will get you $50 off. And what I would share is that the solo 401k, so this is probably the final thing if you are taking notes at home, needs to be opened in the calendar year so you can benefit. What do I mean by that? You probably need to open the account by, I'd say, December 15th or December 20th, so it can be processed by the end of the year, so you can benefit from your 2021 self-employed earnings. So if you're a realtor, you had a rock star year, don't wait until January. If not, you're going to be paying taxes on this big amount. So with that, there wasn't a PC way to say this in the 1950s, but there are buckets of money out there for self-employed individuals. Just realizing how you can lower your basis in certain years, do Roth conversions, and you really have the world to invest in of, legitimate opportunities. There's a lot of good stuff out there for y'all. So super quick recap, just be aware this world exists. It can be pretty high, 64.5, increasing 3,000 next year. And I do feel whatever is 21st century diversification to you will get you to that $1 million. And, happy holidays. And then finally, LinkedIn is a great place to reach me. Please say that, we talked here, HubSpot. With the solo K, I'm patting my team on the back from a few years ago, rocketdollar.com/learn. It's an award-winning knowledge base, and I do call it a knowledge base, not an FAQ. They go into the weeds ad nauseum on this. Finally, just my personal code there. And if you ever want to talk Texas, bbcapitaltx.com/investments, especially industrial or self-storage, happy to share more. So with that, thank you.